Two major U.S. banks collapsed in 3 days, Silicon Valley Bank and Signature Bank. Silicon Valley Bank and Signature Bank downfall will go down in history. They failed at such an enormous speed that it is a perfect example of bank runs, in which too many depositors withdraw their funds from a bank at the same time. U.S. President Joe Biden has vowed to take action against those responsible for the banking crisis in the country. This came in post 2 of the major U.S. banks collapsed in 3 days. Well, the reason could be a deeper problem, showcasing the errors in American banking ecosystem, focusing on record inflation, shady balance sheet and rising rates. Martin Grunberg, the chief of Federal Deposit Insurance Corp. (FDIC), warned last week about $620 billion risk lurking in the U.S. financial system, and by Sunday a major showdown of 3 banks happened, Silvergate Capital Corp. being the third to succumb. Bank faces interest rates risk when the rates increase rapidly within a shorter time span. This is what is exactly happening in U.S. The Federal Reserve has been increasing the rates aggressively since March 2022. In a bid to control the inflation, Feds has increased the rates by 4.5% so far. This has resulted in commensurate rate jump. As per the AP report, the yield on 1-year U.S. government Treasury notes hit a 17-year high of 5.25% in March 2023. Up from less than 0.5% at the beginning of 2022. Yields on 30-year treasuries have climbed almost 2%. This starts a chair reason. As the yield on a security goes up, its price starts coming down. Such a rapid rise in rates in a short time causes the market value of previously issued debt, whether corporate bonds or government treasury bills, to plunge, especially for longer-dated debt. The showdown happened when the SVB customers started withdrawing their deposits beyond what the bank could pay using its cash reserves, and so to help meet its obligations, the bank decided to sell $21 billion of its security portfolio at a loss of $1.8 billion. This drain on equity led the lender to try raise over $2 billion in new capital. As per the AP report, the call of raise equity sent alarm to SVB's customers, who were already losing confidence in the bank and rushed to withdraw cash. In this digital age, such a bank run can cause even a healthy individual bank to go bankrupt in a matter of days. The U.S. government's decision to backstop all deposits of SVB and Signature Bank regardless of their size should make it less likely that bank with less cash and more securities on their books will face a liquidity shortage because of massive withdrawals driven by sudden panic. However, the current U.S. bank data shows that over $1 trillion of bank deposits are currently uninsured, which creates a doubt that the U.S. banking crisis is not over yet.